Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today we'll do our regular agenda market update followed by updating the earnings trades out there and then do this analysis to wrap it up. So let's get started. Okay, major indices all still in one, as you can see here. Been quite a while. 66 days for SPX, NASDAQ, 71, Russell 42. Been a long, long run. We last week we kind of talked about that 50% mark, so that's held so far. It's held the line on the 50. As far as state ones, 45s are overbought, so we're right below that. Um, and that's it for there. Let's look at the market pulse here. So the individual states. So, last week almost, just nudged a little, bullish as far as, the state ones. And I think like 41 to 40. So nothing big. Price wise, SPY were a little up from last week's meeting. So, but nothing big, real moving. Same with the other states. Twos are kind of flat. Nothing going on really in fours. Sevens had a little pickup. Those are the eights. They go directly into the sevens for the most part. So this kind of a overall quiet week. Nothing real big. Um, we're still getting the spikes in the highs, so obviously that's a bullish sign overall. We don't want to see it flip over, kind of like here. Um, but right now, still showing um, good highs. So, and I think that was it there. Yeah, bullish bearish, real quick. Um, mhm. Yeah, so last week we're, yeah, 52, 56 now, so nothing big, but it did hold that line. It's kind of tested it twice here on little dips, so it's held so far. I think a lot's gonna, um, you know, a lot of this depends on, one, I think NVIDIA, everyone, it's all over the news, but I think more importantly is the 10-year. Uh, we're at 4.3. That's kind of a short-term high area, and we got up there back here, 13th. Before that, obviously, we got down to like 3.8, huge rundown, and now it's kind of, you know, been climbing. While we're talking about that, I wanted to pull up the rates. Like you could see, oh, come on. What I was kind of draw your attention to is like look at the 30-year, 4.4. Last year was right around 4. The 30 hasn't been much higher than the 10, but you can see it's starting to move a little here. That's like a normal inversion. Obviously, this whole front end is messed up, but the back end is starting to get a little more pop in that 30-year. So that definitely affects bank balance sheets. A lot of their loans they have out are long term. I mean, you think of all the mortgages and all that. So those are all priced based off of 10 and 30 years. So, but just thought it was interesting. Get a little pop here on the 30. So anyway, so back to all right. So now we'll go into SPX. So kind of same stories last week, right? 5,000. Um, that's the top end of our range. 46, that's the bottom end. So, having problems like we had, talked about a lot, staying above 5. Made a couple passes, the longer we're up here, like batting up against it, I think the more bullish it is. But so far it's had like 2 runs up, and if we stay up here longer, I don't see a problem why I couldn't, break through and hold it. But so far no good on 5,000. So, been in obviously extended periods. You know, that's a max move it's ever done, 19%. So we're about halfway to like all time, or at least since '07, state one move for SPX. But we get above 5 and hold that. So that's kind of the big thing to the top side for the markets, SPX 5,000. And let me pull up the actual charts. Kind of same story here. So that's top end of the range. And there we go. That's the bottom end. So yeah, all eyes on 5,000 for SPX. That's kind of the short and sweet of it there. Currently we're at about 40 points below. So nothing else. I mean, it's well above, another kind of like downside would be the 50 EMA there. That's a ways, 48.23. And then, below that's our 4,600. But yeah, and then, obviously this also the target 3, which, was pretty strong resistance and then turned into support. So that'd be another kind of downside marker, 47.53. And then you got this first 48.23. So that's it for there. Good old Russell. Try to make another at least current state high. So you can see that was the high so far, 2071. So try to make a run up there, 2065, and then just pretty much failed. So obviously to the upside, we got right in our range here of target 1 and 2. 2100, that's the top of the range, 21 to 19. I'll get the tool out. 21 to 19. So that's a grand range, but so the top is right in the modeling kind of first resistance zone, but we haven't come that close to it yet. Not really tested it. And then kind of the bottom here. So it's not been a great state one, but it wasn't horrible. We held on, but I don't know, long time in there, over the average. Definitely not done the average move though. So let's look at I think more importantly is this chart. So what I want to point out first is the 50-day, 1955. So, you can see here, this is pretty much, followed this up, tested it quite a few times. We talked about last week. So to the downside, 1955, that's where I'd be watching Russell, see if that holds. We're at 1990, so still a little bit of ways from that, but and obviously the upside 2100. So long term, it seems like we're holding this 19. So I think this whole four tops maybe over. As long as we keep holding that 19, then this is all past. So, and we did test it once, and that was on the 50. So really, just kind of downside 50, and then upside is 21. So I'll put out the lines real quick. 21. Hadn't tested that in a long time. And then that 19. So that's where we're at. right mid-range pretty much, but kind of what's so like big picture wise, SPX, to the upside at 5,000, and then downside, I'd be watching Russell 1955. So, and the Nvidia stuff could move things up quite a bit after the close. Just want to see, yeah, that's the last time we got up 2100. That was a Fed day, up, down. I remember that. That's your typical Fed. Like, oh, we like what they say, and then next day, wait, let it sink in. So, yeah, that's the last time we hit 2100. That's March 2 years ago, almost. So, wow. Okay. Tool wise, Fed rates, about a month out, and nothing for March. These things didn't move much. Just slight movements from last week. But that was last week was a big change from like the month over month. So still, this one's been creeping towards no cut in the May meeting too. So it's been slowly creeping. You could see last week, this was 35, no, it's 28. We're up almost to 70 for no cut. So first cut right now is June, and that one hasn't changed much. You can see a week from a week ago. No, so this is first cut, and then long term, no real change from last week. Pretty much, 30, almost 30. This is a 1% cut over, by December. So that's it for there. Went through that chart. Yeah, nothing going on here yet. 76. So still think March is going to be some fireworks. You know, this was the last fireworks. That's when like that overnight lending spike, then they just reversed everything. So yeah, we had a little mini one here. It's still kind of keep my eyes on the banks. Yeah, I think it's most likely problem area, especially if this 10-year starts going higher and higher, then that's problems for the banks and their balance sheets and stuff. So I had a few graphics. This was from February. So this is equal weighted versus cap weighted. So the equal weighted S&P right there. This was as of like February 10th or 11th, pretty much flat over the year. And then, the cap weighted. So that's like your Facebook, Apple, all those driving it higher. So then that just goes along with like your own, FANG, Magnificent Seven, and all that talk. And then this was another one. I showed it to Joe the other day. This is a history of asset bubbles and like price spikes. Going back. Hey, that's the year I was born, 77. So born into a gold bubble. Yeah, so it just has all these different. It's real interesting to see that this .com, like how crazy that was. And we have like this was that ARC, that Kathy Wood ETF, how much that spiked, and then you have like Bitcoin over here, and then this new one I think is the AI, and then FANG. You got FANG there, um, AI there. So just thought it was kind of interesting, little schematic. So anyway, so that's it for market update. I'll open up to questions, comments.
Yeah, I have a question.
Mm-hmm.
Do you ever feel how close the queues are to going into state two?
uh, Qs,
They look like weakest of the big four index to
you
me.
think? I don't know. Yeah, I don't, I'm not read in on the algorithm. I just interpret it. Um, but yeah, I haven't looked at that chart recently. I'll pull it up here. I don't know. Yeah, it's a nice run. It's probably it looks just almost like this one, right? I
Yeah,
would say Russell's definitely closest, you know, but I had thought, back here, this probably would have tripped it, but not, it's held. So I think if we make another run down here, um, maybe that stop at this point, just because we're in such extended times, like if we hit that in that stop area, that may go first. Yeah, this one's like off the grid again. So same, I mean, it's pretty much same story as SPX, right? I mean, here's target three, right? Gets up above, has problems, gets up above, turns into support, and then, makes a nice run. So,
but I
yeah.
know you don't know the details of the algorithm itself,
Mhm.
but just because you probably look at these charts more than I do you think the Qs can go into state two if they hit or cross target three, or does it have to get all the way down to stop loss to get into
No,
state?
no, 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 definitely not stop loss. I would say, what is that, 14?
I would say well in
Uh,
advance of target three, Josh.
yeah, I mean, it can flip. I mean, you can go back and look at things like here, right? Um, let's just pull this up for academic purposes. Let's go back, use our trusty time machine, our DeLorean here, and this will be like a similar type transition, right?
The dear, we were scheduled to speak with Ashok this morning. That didn't work out. We haven't forgotten, your question about, anticipating these transitions. When we speak to them, if we, get anything specific, we'll certainly pass it on.
Yeah, thank you for following up on that. I wonder it all the time. You know what
Me too. I
when
assure
they
you.
get close.
Yeah, especially, when we get these extended runs, although we
Yeah.
still got a long way to go in terms of all time. Well, the Qs are getting there a little bit, but
Yeah,
Yeah. So this is the one, on March, all the way to August. You got the resistance here, pops above, then takes off, right? The support. But yeah, it transitioned like up here, like in a day or
yes.
two later. So
Can you step forward one day at a time, just for 2 days? And what did
yeah,
it?
it's a slow,
Ah, it's just too slow. Yeah,
yeah, it's slow, but yeah, we can do it. So waiting on the cloud.
yeah, I understand. Well, I don't
That's
want.
gonna be a great day in Delphian. Like when, yeah.
Yeah, but you answered my question. It doesn't really have to, in the algorithm, it doesn't really have to go back to crossing target three or target
No,
two in order to go to state two.
right.
That that was really my question.
Yeah, I think it did it the next day here.
So that was
It's weird, these little dojis are kind of doji take off. Double doji.
yeah, we do appreciate everybody's patience with the damn speed of the platform. It's more than frustrating. We did find out, in the last week that additional security, was put onto the platform, and that has, it's been really brutal for probably 3 weeks, and that's the excuse. It's unacceptable, but that's why. And as Josh said, one of these darn months we will be in the cloud.
so there it goes to state two. And it was target three was at 337.
Yeah.
So it's well above that. It couldn't have dropped there.
Mm-hmm. Yeah, I still think, the current one could have, there's the two.
Yeah,
So,
366. So it's $30 above the 337.
right.
Yeah, that answers my question. Very interesting.
Okay.
Thank
It's
you.
good. It's a good question. Thank you. Go back to real time. Okay. Anyone else? Questions, comments? Pull up earnings stuff here. All right, close it.
Sudhir, I'm surprised, excuse me a second, Josh. I am surprised that Qs have been in state one so much longer than NDX. That really does surprise me. I'm not sure why. I was actually into the NDX earlier today looking at, the various components, and I've got a bunch of those charts. May have to do some homework there. I mean, that's significant, 20 some odd days.
Say, Joe, this is Dave. My guess would be that there's a more a concentration of a few more stocks in the Q 100s than the S&P 500s that are holding the index higher for longer. Be my guess.
Yeah, actually, versus the SPX, yes, Dave, I agree. But NDX versus the triple Qs, I think it showed 93 days for the Qs. And we're, in the low 70s for NDX. That seems odd.
Well, the Qs are just 100 of the top NASDAQ stocks. So unlike, let's say, the SPX versus the SPY, where the SPY has all 500 of the SPX, the Qs are, in terms of number of components, is significantly different than the NASDAQ composite.
A composite, yes, but we don't actually, and it's something that we will eventually get fixed. It's ridiculous. We don't have the NASDAQ composite in the database.
Mhm.
NDX is the NASDAQ 100.
Oh, okay. I didn't follow that.
And so it's very odd because literally, I mean, I spent a half hour on NDX components leading up to this call to kind of go through some of the bigger charts. And so anyway, that's just something we're going to have to check. It seems bizarre to me that there would be a 20-day differential, in terms of its signal.
Yeah, that does seem odd now that you explain it further.
Sorry, Josh.
Oh,
Go right ahead.
good discussion. So, okay. Earnings wise, bullish pre-runners. We got one open. Cake was open as of last week. I think it closed out today, so it's not much going on. I think even today, yeah, it's down a little. So this is going to be pretty much a nothing burger there. Still overall pretty good for the bullish pre-runners. Only one loss in there. Cake may squeak out a loss barely, but let's see. With the bearish pre-runner, I think that one closed out. Yeah, Roku. That was a slight loss. I don't know if you guys followed that earning, like they got killed after that earnings, but slight loss on that one. Bearish trades haven't been that good. Bullish. PSX, it's up today, but see who came in this trade the first. So this one's coming to an end here. So it's down a little price, down a little money. Overall, you can see we're still profitable for these trades. Bearish runners. We got 4 open right now. A little bearish action might help us some. So we got Yelp. That was yesterday. That one's profitable as we speak, but PayPal, Baba's having a good update, but the other two are still down. So nothing huge, overall down, 150, with, time to go here. The Vol Rise, it's the last active that just came in yesterday too. It's Ambarella, the drone people. So that's a short trade just till the 27th. So we'll see if that one I think was moving decent earlier, but now nothing. But so overall, pretty, this one's still profitable. So I think I only have like one, the bearish trades are kind of dragging a little bit. But, we have the non-movers did well, which is typical. So overall, still pretty good. I'd like to see these bearish trades, start popping a little. Would be nice, but, that's where we're at. Any questions, comments on that? All right. Well, I'll hand it over to you, Joe.
All right, Josh. Thank you. Hi, everybody. Let's see. As Jim Cramer said last night, it's National NVIDIA Day, which made me laugh. I'm going to go back to focusing a little bit on, some of the charts that have been in state one for the longest periods. That's obviously started with XLK, XLC, SPX, NDX. So I'll pull up some of those charts. Again, we're nowhere near all-time highs in terms of state one lengths. It would almost be, close to double where we are at this point. But let's take a peek at the charts. Okay, so here's NVIDIA, and I got NVIDIA going back. Bottom left-hand corner is this time last year, basically. Stock the night before earnings closed at 207, opened, on the announcement the following morning at 234 on this gap, and then we obviously have had a monster run since. I think this chart is, darn interesting at this point, just to see that 500 level. We're a long way from 500, certainly, but a lot of resistance originally at 500 and now support. But you can see, so this time last year, NVIDIA was expected to make 48 cents a share. They came in at 65 cents. So they beat by 35%. You got a good gap up. The following quarter, they were looking for 61 cents, got 88 cents, beat by 45%, and off to the races we went. They're now, making a boatload of money, I think, as people know. This quarter here, they were looking for $1.80. They got $2.50, making, real money. Last quarter, they were looking for $3.03, got $3.77. And at this point, we talked about it last week. From what I see, I guess FactSet, maybe NASDAQ, Zacks, the estimated expected earnings are $4.21 a share, versus 65 cents a share this time last year. So, it's been quite a story of earnings growth. Can't wait to see, what happens in terms of the results. And then, of course, more importantly, what they talk about. Let me see if I got, that's not, yeah. Okay, so here's Palo Alto. And I think, most of you probably realize that this thing gapped down 25% overnight. What blew me away is the comments from the CEO, according to what I was looking at on the web, quote, a shift in strategy, wanting to accelerate our growth in the area of AI. I mean, a shift in strategy, taking 25% out of the value of the stock overnight. I mean, that's mismanagement, if you ask me. It's down in the 250 range. I haven't looked in a couple hours, but it was trading, I think, 250, 275 on a monster gap. The other one I wanted to mention, just pull up was this supercomputer. I think we've talked about it a little bit, and just the magnificent run that it had. As Josh pointed out, it traded over 1,000. What was it, February 12th or 16th? A couple of days after the market topped, and it's pulled back quite a bit. The Palo Alto and this one, I just and it's true, and I think everybody on this call manages their risk well. I've mentioned it, over time. To me, the only thing really that's changed in the marketplace, in the 4 decades I've been paying attention, is the speed of the markets. And, things move so quickly that risk management is more important than ever. That's why we, tend to focus on, spread trades. If you want to be long a call or a put, that's fine too. But, man, naked options, beware. So let's see, just NVIDIA before I get back into those other charts. And I think as Josh pointed out, a lot of the target threes, we've had such an extended run on a lot of stuff. The target three, I think, is going to be a real good level, in conjunction maybe with your fib retracements, darn good support for some of these pullbacks. So, if NVIDIA happens to get, beat up on sell the news, maybe just above 600 is a level. No idea whether that's going to happen, but yes, Sudhir.
Did NVIDIA test well in earnings for a non-mover or a vol crush? It doesn't seem to move that much, but even with that, it may have been discarded because the premium's so high, it doesn't meet the risk parameters. But did it test well or maybe that's a question for Josh, in the non-mover? Doesn't seem to move that much on it.
You're sorry, and that would be Josh, any sense? Because I don't have any sense. I haven't checked that, Sudhir. I don't know if Josh, possibly you have or not.
Yeah, I looked at the earnings analysis chart, and there was quite a few like non-moves, and then there's just a few that were just like monster, like getting outside of the bands. It wasn't a testing. Let me see if.
Yeah, you want me to give it to you, Josh?
No, it's all right. I'll just tell you.
Okay.
I just got to find it. I got to sort it. There's like.
I'm hesitant to hit a different screen.
Yeah. It was for our testing characteristics, NVIDIA was a 60% winner. It was profitable, but 60% win rate. Yeah. It's like all that. It's in the those files I share on the share drive, like the non-mover. It's in the raw data, like if it's not over 80, because I break it down raw data 80%, then the best trades. But yeah, it's in there 60% winner.
Okay, I'll go look for it. I would not be surprised, because the hype is so high. NVIDIA is going to they're making money, so they're going to come close to the, or maybe even beat it, but maybe not enough to move the stock. I wouldn't be surprised if it just goes sideways.
Yeah, I don't really have a feeling on it. Dave may have the best insights. He's the semi guy, right?
Yeah, thanks for that, but I don't know about that. But the market maker move on NVIDIA is $65 or something around there, and it would take it right to about where the 600 mark is. So that's good confluence there to Joe's point. They sold everything they made. That's the thing. The question is, what are they going to do for me in the next 6 months, a year? The competition is kind of now it's got competition like Amazon has got competition. What kind of lagging competition, but it's coming in. So yeah, they'll be buying. There's already buying the dippers out there. So. It's a tough trade. It's a tough trade. There's certainly, in my opinion, a lot more risk to the downside than the upside. If you will, I'd place my upside, shorts at the all-time high and the downside at 600. But we'll we'll see toward the end of the day. It's liable to move significantly between now and 4.
Right. If you're gonna do it, I would definitely make sure you get the options for next week. Give you a time, to make up in case in case it moves against you real far.
Well, it's an expensive, if I go to next week, you know, not calculating the whole iron butterfly, but just the selling the putting the call in the middle is $80.
Mhm.
And then you would buy the further out legs, but it's a pretty expensive trade.
Yeah.
So it wouldn't meet the risk parameters that
Right.
use. But I wouldn't be surprised that if it just goes sideways.
It's so expensive and the move can be so big. It's almost a digital trade. You're either right or you're wrong. There's hardly any in between.
Yeah, that's why I'm such on this trade. If the risk parameters met my normal criteria, I would say, okay, I'll take it. I'll take and risk the money, and it could be a total loss because it moves a lot. But I don't know. There's so much hype, it just may not move.
Yeah. Well, you definitely want at least like 2-to-1, reward to risk, for those type of trades. So.
Yeah, I think implied volatility percentile or IV rank is like 81%, so it's not like 100%. And because it has fallen some in the last couple of days, so it's again it's if I trade this, I got to trade it small and like a digital trade. I'll pick a direction and see what I'll do if I trade.
Oh, Dave, you had mentioned, I think a couple of weeks ago, they or maybe last week, they have sold everything they make. One thing that has gained a little traction in terms of conversation is that they've invested in 33 different companies in the last year, 11 of them, I think, in the last quarter. And these are all startups that I think are expected to turn around and be big, I don't know about big customers, but, customers of theirs. And so I don't know what'll come out of the post-earnings conversation about that, but, there seems to be some controversy associated with, them investing in 33 different companies in the last 10 months. So see what happens.
Their chips are like 30 grand a piece. So, that's like a half a
Are they
house for a
really?
lot of people or whatever.
Wow.
Not for a lot of people, but for some people, it's a lot. So for what chip? So I see if there's going to be pressure, it's going to be to like margin. It's going to be like margin pressure that
Right.
might be a problem in the future. But I don't know how far out in the future. They could sell everything they make for the next 3 quarters for all I know.
Yep. Well, it'll be interesting. A couple hours from now. Let's see. I'll just a couple other things. And so I pulled up the NDX. So last year, if you recall, we basically had a short-term high in the market in early February. It was February 2nd last year. So far right now, I think it was like February 15th this year. It's been a recent high. We got a 8-9% pullback in both the NDX and the SPX this time last year. And I think, as I said to Josh in the conversation over the last week, I don't think we ever would have got that. That to me was the Silicon Valley sell-off. And so it turned out to be about 8-9% in both SPX and NDX. So if we're going to get a meaningful sell-off here, I would think that could be max. I mean, I put together all kinds of retracement numbers, but maybe, and it would frankly surprise me, because we had the consecutive days of increasing pie. We've had this multiple state one runs. I mean, you came out of that Silicon Valley low, and we rallied our rear ends off all the way into July. And I certainly could see that this year, given that there's earnings momentum. I know we've gone a long way already, but supposedly earnings are going to continue to do better. It's going to take some of the multiple out of the market. It wouldn't surprise me if we did something similar and we ran into that, July period where, okay, maybe we back and fill a little bit. You got the presidential election coming, hard to say whether the Fed will have cut once by then or not. But I just wanted to kind of point out that we had a February intermediate, early February high last year, pulled back 8 to 9% in both the NDX and SPX, and then off to the races we went. So just, maybe something to think about. In terms of the retracements, I mean, I pulled up different time frames of the NDX chart. Again, it was XLK and NDX that have led the charge in terms of number of days in state one. If we're to pull back, because basically, we had that little hiccup. And again, these charts, left-hand side, give us that hiccup sell-off end of December into the first week of January. We basically, bottomed at 16,250 in the NDX, rallied 1,700 points, in a few weeks, somewhere between 17,000 and 17,300 basically is the pullback. But that's only the January low, which, on the longer term chart is nothing. But, we have not even, gotten through a 5-ish retracement of this low at this point, not even close. So, that's coming out of the January low. This, let me see, I think this next chart was supposed to be, that's SPX, sorry. So many charts open here. There's NDX coming out of the October low, and that's October of 23, not the big low in 22. We got a 4,000 point run, from October 26. We ran $4,000. So, somewhere in the neighborhood of 16,000, which is a hell of a long way down from here, is, a 50% retracement coming out of the October low. I don't think that's coming. I don't think anything close. So I think, back to this short-term January low, a 5/8 retracement of this. And again, we're talking the NASDAQ 100 here, not the NASDAQ composite, would be just over 16,900, would be a 5/8 retracement. So if I, was looking at anything, that's what I'd be looking at. That's 200 points from here at least. I mean, I haven't looked where NDX is in probably 45 minutes, but that's another 200 points. So, a couple numbers to possibly keep in mind. SPX, again, here's the January low. What did we run? We ran almost 400 points from the January low. 4,900 is the 3/8 retracement. Basically, between 4,820 and 4,900. 4,820 to 4,900 are the retracements, coming off of the January low. So that, in the short term, that's what I'd be looking at. If you get below 4,920, or excuse me, 4,820, then we start talking about going back and looking at the retracements for the October lows, excuse me. So 4,820 in the SPX, and I think 16,920 in the NDX, the NASDAQ 100. In the short term are the couple numbers I think that are somewhat meaningful in terms of potential pullbacks. There's NDX coming to the October low, get the 4,000 point run. And, going back a bit further, there's NDX, when we topped out, because again, XLC, has been one of our longest state ones. It's only, I think, a day behind XLK. And XLC, has two, and I'll pull up that chart, but two monster components. It's Meta and it's Google. Whenever I think of Meta, I think of the fall of 21. That thing was the first thing to top. And, lo and behold, obviously NDX a little bit later in November had the big sell-off, and, that we've taken off obviously since October 22. I was looking at this chart earlier. I don't get a comfortable 5-wave count to the upside. Again, this is October 22. Is this little muted leg here a leg 1, get a sideways 2, run up in 3? That's a good looking leg 3. This actually looks like a good leg 4. Leg 4s are often complex, A, B, C, D, E, and things of that nature. And then a 5 out of there. Again, there's a lot of art, not science, when it comes to Elliott Wave. I don't really think this is a crystal clear 5-wave. If I were a bear, I'd be saying it's a 5-wave, but I don't at this point. But just trying to look at the charts, with different perspectives, and that's NDX. See, and then getting into the individuals again. Microsoft obviously a big factor in a lot of these things. Back to your point, Sudhir, with the Qs. So NDX, the 5 top weighted charts in the NASDAQ 100 are Microsoft at 9%, Apple at 8%. You got Amazon, NVIDIA, and Meta all about 5%. So, I just wanted to pull up these, and, all these big mega caps, they're basically past earnings at this point. You've had some time for the earnings to be digested. Let me just, the furthest I could see any of these things pulling back for the most part, don't mean to generalize completely, but, it was a target 3, and frankly, don't even really see that happening. But, these target 3s and these mega caps, could be potential targets, if the market's going to roll over. Certainly, and I haven't done any homework. What's our longest? It's right there. That's why we added these maximum days, 243, in 2020. We got a 40% move right now. We're half that in Microsoft. So, historically, there's still a hell of a lot of room. I don't think we're going to get that kind of move, but and part of that move was after excessive sell-offs, with the COVID sell-off. So, but again, target 3 would be best case scenario if you're looking for a place to get in, with the market selling off. That's Microsoft. Got Apple. Now, Apple to me is a darn interesting chart. I'm guessing many of you have taken a look at it, but just looking at that, this 180 level is, okay. It's an important level short term. It doesn't take much of an expert to, wow, okay, keep an eye on 180. So I think that's worth keeping an eye on, rather significantly. Does Apple hold this 180 level? If it doesn't, okay, you're going to get it back and full. To me, it's nothing like, the market's going to turn around and crash or anything like that. Goodness, no. But as we pointed out last week, or maybe I guess it was 2 weeks ago, this thing had rolled into, state 2. State 2s are typically not long, so we've exceeded by a couple days already. We've gotten a pullback. Maybe 180 turns out to be a good test. Probably a pretty good proxy. And, we'll probably know after the NVIDIA earnings tonight whether Apple's going to hold 180 or not. If it does, maybe that's going to be a good sign for the market going forward. Another big one, Amazon. We got the gap on the earnings, and we're backing and filling. And the market's been on a tear. Are we going to just kind of get a pause. We kind of talked about that last week. I mean, we had, a couple volatile days, on the inflation numbers, but, in essence, the market, with the exception of NASDAQ, which I think was down 1% for the week, the averages were down a little bit for the week, which was, very rare. Since October, those, weekly moves have all been to the upside, but, it'll be interesting. I mean, if you roll over, Amazon, it's going to be kind of close the gap at about 61. But that's, again, a fairly long way. What do we have in terms of time? Solid state one, that's for sure. Interesting average move is right about there. So that's Amazon, with these big caps. XLC, I wanted to point that out just because the Meta, which is 29%. XLC has been, I think, 71 days in state one. And I really haven't given this enough respect, in our weekly calls over the last couple months. But it's essentially Meta at 29% and Google at 21%, make up half of this thing. And then it's everything under 5% under that. You get into the Disneys, the Netflix, and, stocks like that. But we got 71 days, it's had a heck of a run, could have pulled back to target 3, maybe. But again, Meta and Google are the big boys here. Let me shrink this down a little bit. We haven't obviously gotten up to, back to my point about the, Meta before, Meta topped out, basically September of 01, and lo and behold, that's when the XLC topped out too. So that all-time high is 86 and change. I don't think we've quite gotten there at this point. So if the market's going to take off again, that'll be, a target to look for, in that group. And here is Meta, it topped out, like we were talking about, early September of 21, sold off dramatically, and it, along with XLC, have been roaring to the upside. Another heck of a state one, and I think that was early November, November 2nd. Got a gap on the earnings. Is the market? We've had a fair number of gaps on earnings, and so we're sideways. Kind of to your point, Sadir. Are we going to continue to go sideways? I guess we're going to know more after the NVIDIA number tonight. And there's Google, solid chart to the upside. Again, that's 21% of XLC here. So look at that target 3. The shook is something else. I mean, traded right up to it and back and fill with that chart pattern that Josh talks about all the time. And okay, they're just XLK. Out of respect, I think this is the one that's been in state one the longest. What is it, 72 days at this point? Yeah, a day longer than XLC and NDX, but number of the stocks we just looked at are part of this as well. Microsoft, Apple, they basically make up almost 50%. So see what NVIDIA says, Apple at 180, I think really good to look at. And charts I just wanted to bring up today. Happy to discuss any of it, but thank you all for joining as always.
Say, Joe?
Dave.
Two little closing comments, or one question and comment. Do you remember back, I don't know, maybe a year ago, maybe I'm off by 6 months either way, I don't know, but didn't the SEC come out with some, they were going to take, I thought, some action to keep the high percentage of, the stocks that have a real concentration in some of the indices. They weren't going to buy them, dollar for dollar for the percentage that they have. So I thought the attempt was to keep the percentage from growing, or to try to shrink the percentage of impact that any few companies have in a index or in a ETF. I do you remember that? I thought there was some action they were going to take, but it doesn't seem like there's any reduction in the concentration in some of these mega cap stocks. It seems like they're still just as concentrated as they ever have been. Or you think I'm missing something there, or?
I don't have, I have a recollection of that, Dave. SEC, I don't remember whether it was them. And to your point, haven't seen anything come out of that. I do have some recollection of, I think maybe we even talked about that, and it was some time ago, but I'm not aware of any changes that have been made.
They still feel pretty concentrated to me, and it's like the big caps just can't lose because they've got so many different revenue streams, whether they're services versus products versus, whatever. They're some of these big stocks are transforming from what they used to be as growth stocks into other things, like Apple, for example.
Yeah.
And the other observation I would be interested if other folks pay attention to the NVIDIA, whatever it does tonight, whatever it does, how AI speak might be, news after the NVIDIA call, how the AI news takes that. Does it take it at like, maybe there's a little more hype than AI truth in the matter, or maybe I'd like to try to understand how any investor takes a look at any underlying stock and says, okay, this is the benefit that AI has given Microsoft, or this is the benefit that AI has given Google, or this is the benefit that AI has given Apple, any of them. Because they don't, to my knowledge, they don't break that out on any of their financials. There's no AI line item in there that says, they all said they were expending a lot of money in investing in AI, and they all touted the benefits of AI, but I'd like to try to understand how AI is working down to revenues and earnings that are outside of faster computers and more memory.
I think we'd all like that.
All of the big mega caps that we just talked about, all of them were hyping up AI. Every single one of them that you just mentioned, except for Apple. Apple was not quite so on the AI bandwagon because it's a handset thing, right? It's not a cloud company. But all the cloud companies with big server farms, lots of memory, they say they're AI. Well, they are or they aren't, doesn't really matter. If their revenues are going up because they just have bigger, faster cloud computers, it doesn't really, AI might not even be in the picture. Yet the hype is, I don't know how to dig out what's hype and what's not in AI with respect to the numbers that come out in the earnings reports. If there's anybody that has a clue or has some inside information of that, give me a call and let me know, or I'd be curious as heck to try to figure that out. Just a comment. We'll see what the speak says. Yep. Regardless, is that if NVIDIA hits it out of the ballpark, well, AI talk is going to come right back around, and I think we'll see a big push higher in the SPX and the index, and especially in the Qs. We'll see. It'll be an interesting call.
It sure will, and the market's going to have to kind of do its own thing from a numbers perspective, because between now and next Wednesday, there aren't a ton of numbers. You got a PMI flash tomorrow, then you get some home numbers. I think maybe Friday and Monday. You get some GDP estimates next Wednesday. So the market's really kind of on its own from that perspective. So I can't wait to see how it reacts. I got to believe they're going to crush the numbers because the surprises over the last year have been exceptional. Now, granted, when you're talking about making 65 cents or 48 cents a share, it's a whole different animal. Expected to make 421, so that surprise percentage will certainly shrink. But I'd be awful surprised if they don't blow away the numbers. Then we see how the markets react over the next couple days, to see, where we close on Friday. I think another takeaway, I mean, there've been a lot of hype, I think, about, up for the week coming out of October. And I don't know if I read where 14 out of 15 weeks the markets were up. Let's see where Friday's close is versus last week. It was only, we rolled over a little bit in the last 30 minutes last Friday, and, with the exception of NDX, we got, downward week. Let's see if the market closes, with an up week after NVIDIA earnings. If so, I wouldn't surprise if, once again, the surprises are going to be to the upside.
Yep.
All right, Josh, I've taken way too much time.
No, it's good discussion. Good analysis. Anyone else before we wrap it up here?
Yeah, Josh, this is Robert here.
Hey, Robert.
Just a couple comments on Dave's comments is that I heard that NVIDIA has taken over Tesla's spot as being the most volatile. And according as far as chips, I heard that OpenAI wants to raise $7 trillion on a new AI chip. So previously I had heard the CEO of NVIDIA in a talk he did, it sounded like we had the hardware. So just like him, I'm trying to sort it all out.
Yeah, I heard about that large numbers and I saw that in the news. That's a lot of money. Anyway, yeah, thanks, Robert. Okay. Anyone else? All right, we'll wrap it up. Do it again next week. Thank you all.
Enjoy the number, everybody.